Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for November the 4th, 2010. Now we're going to have a number of trades here tonight. I've been away in Mexico for the last week and I'm back now, so we're going to have a look at the market. I think based on the Forex weekly outlook, the analysis was pretty much bang on from vantage point that the US dollar was going to continue to come under pressure. We were going to see further US dollar strength based around that US dollar index, the analysis on crude oil, the equities, everything going right along as planned. Nothing has changed. So despite the knee-jerk reaction to the news today and everything else, nothing has changed here. So let's have a look at some of our positions for tomorrow. First one we're going to be looking at is the S&P 500. Equities closing at 1197.3. Good strong close there. We've got three key levels of support: 1175, 1184, and 1191. So what we can surmise from this is that we are clearly in heavily overbought territory, but we can see that the triple EMA cross from vantage point is beginning to make its move to the upside, even though we're heavily overbought. And what I want to point out is that in these types of trending markets, overbought and oversold indicators usually do not produce well. So that's a good thing. Now looking at the predicted medium and long-term differences, they're bouncing off the zero line and heading higher. So everything looks good for these equities to move higher, and the S&P 500 to break that 1200 mark very soon. So let's go in now to the vantage point daily high, predicted high and predicted low for tomorrow, and see what we've got for an actual price action here. Now I'm suspecting somewhere down around that 1180, yeah, 1187.90 is what vantage point is suggesting for tomorrow. So it's going to be a very shallow dip. Now I'm using the continuous contracts. You have to make adjustments to your target month, or myself personally, I trade CFDs via the FXCM UK trade station. So it's a mixture of the cash price and the futures price. So that's what I'm using these. That's why I'm using the continuous market. So 1187.90 is the price we're looking at tomorrow, and we can see here that Vantage Point is predicting that the S&P 500 will take out that 1200 mark tomorrow. Now 1200 is a big psychological number. Once it's taken out, there's a few things that could happen at this level. We could just touch over the 1200 mark and then it could pull back substantially, or your real aggressive traders, your people that were still banking on those short positions, they're going to bail, and they're all going to, the CTA model funds are all going to load up on longs just over the 1200. So at any rate, we'll see how that plays out. But for tomorrow, 1187.90 is the area we definitely want to be watching. So now that we've identified the predicted low for tomorrow, we want to use that predicted low. We're in a good trending market here. So 1191.3, that is the 3-day predicted moving average from Vantage Point. For your more aggressive traders, that also suggests a potential entry at this level. So anywhere between 1191 and 1187, that's where you're going to be looking for to get into those buy positions on the equities. And again, Vantage Point is predicting, and I am in complete agreement, that the S&P 500 will move above that 1200 mark this week. So our second position I want to point out here for tomorrow is light sweet crude oil. You can see I talked about this in the Forex weekly outlook on Sunday. I've got this trend line drawn across here. I'm not a fan of trend lines. I don't believe them to be that accurate personally. That's why I like the moving averages, the crossovers, but in this particular case, you can see that it's come down and it's hit that trend line. After it did that, and the Vantage Point triple EMA, the medium and long-term crossovers did not suggest we were reversing short, that the crude oil contracts were going to stay long, then I decided to draw that trend line in there. Now what we can see here also is the predicted true strength indicator is crossed back to the upside, slightly overbought. Predicted MACD, same thing. Now the predicted medium and long-term differences, I also want to point out they spent some time right around this zero line, but they did not cross that zero line, and they've subsequently moved higher. So we've closed today at 84.69. Looking at the key levels, 82.21, 83.13, and 8400. So we've identified that we still want to be buying crude oil contracts. We're looking for a position to buy it on a dip. Now we're getting into, we're getting kind of high on these, but the thing is, this is the hardest thing for traders, is to buy a break instead of selling a top. We don't want to sell a top here. There's nothing that's going to likely cause any great deal of strength in the US dollar right out of the gate. So we want to stick with the buy positions. 1164 or 8364, excuse me, represents a potential entry point for me. So that's our first one. That's the vantage point predicted low at that 8364. Now let's have a look at what we've got here. We've got 83.12, 82.21. We want to make sure all our stops are below that 82.21 level. Very, very important. Our entry point for tomorrow, I'm going to call 83, I'm going to split the difference between 83.65 and 83.13, which is the 8-day predicted moving average, and we're going to go with 83.40 for the entry point tomorrow. And again, we're going to be looking for a move back up. Then once we get that minor retracement, we're then going to be looking for a move back up over that $84 a barrel. So that's our second position. Now, since I've been out for a few days, we're going to do a third position. This is a recommended trade that I made to my guys last night. Euro Great Britain did very well. We were buying this on a dip down into that 87 level. We can see here the vantage point. We've closed at 87.87. That's above the 18-day predicted moving average from vantage point. These indicators are starting to turn positive again. The triple EMA cross has tried to complete, but it has not. It has not been able to do that. And this is a bullish signal for this Euro British pound. I believe that the Euro will outpace the pound in against the US dollar, and that subsequently will bleed off into strength in the Euro British pound. So let's go in and have a look at what we've got for tomorrow. This is going to be a volatile trade, so we're going to be looking at the predicted high and the predicted low for tomorrow. Now, again, we're not always just trading off those. We're looking for a directional bias. So we've got 87.08, 88.19 as the predicted high. So we're going to be looking for a pullback, but I suspect that this the 18-day, the 8-day, and the 18-day predicted moving average are going to provide some support here. We can see we've got 87.46, 87.46, and 87.40. So for tomorrow, we may see a very shallow pullback. So your more aggressive traders can get in at the 87.40 level, because clearly all the vantage point predicted moving averages are all stacked up in that area. And then your less aggressive traders, they can wait for a pullback towards the 87.10 area. Myself, I'm already long on this one from today at the 87.12, 87.0. I'd have to check my account. I believe it's the 87.02. I'm long on that one from today. Very, very good, nice move on that. So that's how this one is shaping up for tomorrow. Now again, we want to watch that 87.40 area very closely tomorrow to see what happens. So those are the market positions for November the 4th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.